Right. So let me just repeat it once more. So guys, free cash flow till this point of time, what I've discussed, I missed on the record. I'm sorry for that, guys. Just give me 2 minutes. I'll just complete it. So guys, we started on discussing what is free cash flow. So free cash flow, as per me, is the ultimate measure of investability of any company, and we can compute free cash flow as CFO minus capex. CFO stands for cash flow from operations, and capex, how you can compute, is shown over here. These are the two formulas which can use gross fixed assets plus capital work in progress at the end of the year minus gross fixed assets plus capital work in progress at the start of the year, or net fixed assets plus capital work in progress at the end of the year minus net fixed assets plus capital work in progress at the start of the year plus depreciation for the year, right? So this is how we compute. Now, as I was mentioning, that free cash flow is similar to, say, the savings that we do in a household. So in a household, what happens if we are not having enough savings for ourselves? The challenge is we need to extend hands to someone else for getting loan so that we can meet our expenses, or meet the specific requirements that we have the money for, right? So the date which we raise fund for expense needs to be paid at. So what, if we take a debt, we need to pay at predefined intervals, irrespective of the fact whether we are able to save in future, have our job intact or not. So debt pressure increases the bankruptcy risk and leads to stress in our lives, right? So the scenario is exactly the same in case of companies as well, right? So in companies, what happened, that is, if a similar situation we connect it in context of a company, there the spending in a company goes beyond it means, and such a company would have to raise funds from additional sources like debt or equity dilution to meet its requirements. So these funds, if raised from debt, would decrease profitability by interest expense and increase bankruptcy risk, and if raised from equity would lead to dilution of the stake of existing stakeholders, right? So if the company is not having enough money and they require the money, so there are only two ways they can go about. They either have to take debt or loan, for which there is a regular amount of payment that they need to do, irrespective of whether the company makes money or not. So that increases their bankruptcy risk. Or the other way is that they have to dilute their equity stake so that they can raise finance, right? So that's the only two ways to go about. Now, in both the cases, the situation of companies continuously raising debt or equity to meet their cash flow requirements becomes less attractive for investors as compared to the companies that are able to meet their fund requirements from their cash flow from operations, right? And that is what happens. So it might be argued that the investments done today by the company would lead to revenue and profits in the future and would generate wealth for the shareholders. So companies would definitely go into that dire situation where they would keep very less money to themselves when they really have some projects on which they would like to make investments, because they foresee a lot of return coming up for them in the days to come, right? So this argument is a valid argument, just like an education loan for an individual, right? So an education loan funded by a loan is an investment, and that's not an expense. So which has the potential of increasing the skill sets, earning ability, and future wealth of a person, and therefore is considered a good investment. So there's a difference between investment and expense, right? And when a company is going into that sort of a situation where they are not really looking forward to keep a lot of free cash flow for themselves, they surely, like we presume, that they should be really looking forward to a situation where they are going ahead with making certain investments from which they are going to get great returns down the line. Right. So, guys, is it clear till this point of time? Any questions, any thoughts that you would like to share at this juncture? Uh, anything that you would like to share, or is it okay? Just give me a quick A in the chat box if it is okay till now. You are in sync with what I'm trying to share across. Yeah. Okay. Okay. Right. Okay. So let's move forward from here. Now the thing is that. Now, similarly for companies, the investment in plant and machinery and technology is like an education loan which increases future earnings potential. Therefore, we should not worry about the situation where a company is not able to generate positive free cash flow for a few years. Guys, I write these sentences so that if you're by chance not able to follow my my words, you at least follow the sentences mentioned over here. Or tomorrow, if you want to capture certain things, you can take a print screen of this and paste it at your end so that you can take notes along with, right? So that's the reason of writing all the lines, or otherwise I could have just avoided, right? So take it in that manner. So, however, if a company is not able to generate positive free cash flow over long periods of time, then the company resembles a continuous cash guzzling machine, which we have already explained. So, it resembles an individual who is continuously garnering degrees after degree, costing millions of rupees or dollars without ever putting those skills to commercial use, right? So, what is a situation where, as an individual, you are getting a lot of degrees for yourself, but you are not really applying anything, and so you have spent a lot of money getting those degrees, but you are not applying. So similarly, what's the point of making those investments if you are not really taking, I mean to say the company making those investments, if they're not taking it forward in terms of generating returns out of those investments, right? So that is surely one of the objectives that they have to look into. Now, I, as a shareholder, I expect the companies I own to be cash generating machines. So their business would be a source of cash for me and not the other way around. Therefore, positive free cash flow generation by a company over the last 10 years is one of the key criteria for stock selection for me, right? So I'm giving my thoughts that see, a company is there, a business is there for generating cash, right? So they should be able to do that. And if somewhere they are not able to generate free cash flow over a period of maybe 1 2 3 years, they may have some downfalls or whatever, right? Or some investments they've done. But if we take it for say a 10 period horizon or a longer horizon, I mean to say, and still if we are not getting to see free cash flow to that extent of the company, then we really need to ask questions around that, right? And uh, how to go about, I'll discuss as we move forward, right? So now I'll introduce to another concept which comes along with free cash flow. Is called the margin of safety, right? So how does that work? So it's my observation that companies which have achieved their sales growth in the past by using the minimum amount of cash flow operation as capex have a significantly higher margin of safety over the companies which have used almost all CFO, right? So what do I mean to say? That a company which has achieved their sales growth just on the merit of the of like what did they say, that it's a relationship between the capex and your cash flow for operations. So with less amount of capex, if you are able to generate the same level of sales, right? Or the cash flow from operations, I mean to say. So means say cash flow from operations is say 100 rupees, and capex that you have invested is say 30 rupees. So 100 minus 30 is 70 rupees, right? And another situation, take another situation where the cash flow from operation is same 100 rupees, whereas the capex is 50 rupees. Then 100 minus 50 is 50, right? So which is a better situation? Obviously, if I'm able to save more in terms of 70 rupees vis-a-vis the 50 rupees, it's a better situation, right? If obviously I do not have any better alternative where I could have invested that money and could have generated more return, right? Otherwise, this would have been the best, like a better situation where I am able to have more cash flow. Are you guys in sync with me? Just let me know. Give me a quick A in the chat box. Are you, if you are agreeable to what I'm trying to say, right? Right. What about others? I got very few responses, right? So now the thing is, we need to understand the difference between positive free cash flow and negative free cash flow, right? And that is where I am trying to bring the attention to. So needless to say, the companies which have their capex much higher than the entire CFO over the last 10 years, that is negative FCF. Now, when negative free cash flow happens, when the capex figure is more than the cash flow from operations, right? That is when we get a negative free cash flow. So that means what? There is a low or negative margin of safety, right? So if the free cash flow is more, that gives more margin of safety, as the word itself says, margin of safety. So the more savings you have for yourself, it gives you more margin of safety. So tomorrow, if you fall into any challenge, you have more ways and means to safeguard yourself than a situation where you don't have any money in your hands, right? And you need to borrow from some place. So I hope you got the concept of free cash flow, margin of safety, and you got a sense as to what is positive free cash flow and negative free cash flow. I'll show all these things to you practically, how to go about for this, right? So in context of this concept, let me take you through an example. So let's take an example of two similar size companies, A and B, growing their sales at a similar rate, say 15% in the past. So let's assume both the companies A and B generated the same amount of cash flow from operations over the last 10 years, say 100 crores, right? Now let's assume that on analyzing the capex done by these companies in the last 10 years, we find that A has achieved the sales growth 15% by doing a capex of 50 crores. That is 50% of CFO, right? The CFO was 100 crores. So 50% of 100 crores is 50 crores. So utilizing 50 crores of capex, they have gained a sales growth of 15%, thereby generating a free cash flow of 50 crore, right? Free cash flow is 50 crore because 100 minus 50 is 50 crore. On the contrary, we find that a company B has achieved the same sales growth of 15% by doing a capex of 100 crore, right? So they have utilized the entire CFO or capex. So that is nil free cash flow, right? So when the tough times strike the economy in future, the probability of companies would decline, customers would delay the payment of cash, suppliers would ask for immediate cash, and the credit from all sources would become costly, right? That is the situation which really we get to see when the economy is bad, right? And in this sort of a situation, in such a situation, company A, whose business model permitted it to achieve the sales growth by using only 50% of CFO in the past, would be able to bear the impact of reducing cash inflows as customers cancel their orders, squeeze profit margins, and delay the payments. Now, these are the practicalities, right? This is the sort of challenge which the companies face when there is some economic downturn, or for some reason the business is not going well for a certain period of time, right? So a company which has that ability to absorb this shock, that is going to do better. So theoretically, company A can tolerate its profitability and cash collections declining by 50% before signs of stress start becoming visible on its business operation and planned investments, right? On the other hand, company B, which was already investing 100% of its CFO to generate sales, would find even the slightest decline in its cash flow from operations impacting its operations. So declining orders, reduced profitability, delayed payments would make it difficult for company B to make payments to its suppliers and to do planned investments, right? So company B would have to rely on additional debt equity raising to fund its cash requirements. Guys, I'm explaining all this so that you know what is the logic behind it, right? We are not simply doing plus minus division multiplication. I'm trying to give you the sense as to how the industry works and how you get an effect on the business side of it, which gets reflected in the financial numbers, right? So now we take an example of another company, say C, which is already using more than 100% of its CFO in capex, thereby having negative free cash flow, right? But over here, such a company would already be sagging down under a lot of debt burden. In a tough economic situation described above, company C would find it difficult to continue its business operations as usual as sources of cash dry up, which is very evident. The additional debt, which was essential to sustain its business model, would become further costly. So companies like C are prime candidates for bankruptcy in tough times as they find it difficult to service existing debt, make payments to suppliers. So such companies, usually being capex heavy and operating at low profit margins, find it difficult to garner additional business by reducing their profitability as it would push them into losses. So such companies rarely have any margin of safety built in their business model, right? So we understood that there are this three set of situation where we have a positive cash flow, second we have a nil sort of a cash flow, and free cash flow I mean to say, and the other is a negative free cash flow, right? So these are three situations which I wanted to give an example of, right? Now let's build our focus into positive free cash flow. Now this is an example which I'm taking. So before that, guys, just Let me stop and try to understand. Is it going well, guys? Are you learning something? Just give me an A in the chat box if it is you are getting something, right? Okay. So guys, now the fact that I'll discuss on something, say Honeywell Automation India Limited. This is an example I'm going to give you an example. How we get these numbers, I'll show it to you practically. I've shown to other guys who have joined my other webinars, but still I'll show it to you today. So if you see over here, just on this extract that I've taken up, as you see over here, the free cash flow of this company is 1207, right? And what is the cash flow from operations is 1501. So if you see that 80% is free cash flow, right? So positive free cash flow, obviously, because CFO minus what would be the just yeah. So CFO minus your 1501 minus 294 is your free cash flow of 1207, and your so free cash flow is roughly 80% for this company, right? So let's go deep into this. So as we see, over the last 10 years, Honeywell Automation Limited has generated cash flow from operations of 1501 crore, whereas it needed to invest 294 in its business and thereby leaving 1207 crore in hand as discretionary cash to reverse its shareholders, right? So no wonder that the company could provide dividends to the tune of 198 crores over the last 10 years, right? So let me reduce this so that it gets easy. So as you get to see, it speaks about how much of dividend they have placed is 198 crores. So they had that extra money, so they could place across the money, so they could place across a dividend of 198 crores, as you see, right, over the last 10 years, and still increase its cash and cash investments by more than 1,000 crores over the last 10 years. So if you see over here that so just give me a minute. Yeah, so this 1,000 crores that is referred to, this 1207 crores, right? That is what it is aiming at. So just give me a minute. So Honeywell Automation Limited presents an example of a very attractive business which offers 80% of the cash generated to its owners as free cash without compromising on its future growth. So this represents a huge amount of margin of safety built into the business. So during tough times, Honeywell Automation Limited can reduce prices of its services. Now, what's the benefit of having a free cash flow, guys? Is that they can now what they can do is they can reduce prices of its services if they want, offer higher credit period to its customers, pays vendors promptly to attract and retain quality suppliers without impacting its balance sheet. So it would not need to raise debt for such crisis strategies. Only a slight reduction in the dividend payouts to the shareholders would provide enough money to fund the emergency measures. Right. So I believe you understand that this is quite a good situation to be in. Right. So, now let us see a situation where there is a negative free cash flow, right? Now, this is of Philatex India Limited. So, where you see the free cash flow is 507 crores, right? Whereas cash flow from operations is 791 and the capex is 1298 and the free cash flow is in negative, that is 507. So what you see that over the last 10 years, Philatex India has generated cash flow from operations of 791 crores. Its business required to invest is 1289 crores, thereby eliminating any chance of free cash flow and the negative free cash flow 507. So total debt of the company increased from 81 crores to 720 crores, right? So if you see over here that the debt of the company, how much of loan they have taken has increased from 81 crores to 720 crores over a period, right? So, so if the economic scenario deteriorates further, then the company would have to meet its cash requirements by raising further debt or or equity. So in case its lenders or shareholders do not provide this capital, then the company would face a difficult time to tide that crisis. So looking at the above situation, it's clear that Philatelics India does not have a significant margin of safety built into the business model. Therefore, an investor can see that positive FCF is an important parameter for investment, and the fact that the higher the FCF as a proportion of CFO, the higher is the margin of safety. Right. So, guys, as I'm mentioning a number of times, it is not only on the merit of a free cash flow that one takes a decision around investment. So please don't come into that sort of a conclusion, right? So I intend to discuss on various parameters, but separately under each of these parameters, what are the set of things that needs to be seen? That is where I'm coming from, right? So today the discussion is around free cash flow and how to look into it, right? So guys, am I making sense till now? I hope you are appreciating the fact between free cash flow, positive free cash flow, margin of safety, negative free cash flow, and how it all works together, right? How many of you at this point of time would be interested to know how to get these calculations done in a very smart way? So give me just press B in the chat box if you would be interested. Because the way you can interpret these figures would be obviously function of your this thing, right? So guys, yeah. So let me show it to you. So just give me a second. So guys, whoever is joining my webinars from time to time, they already know about this. I've already spoken about screener.in, right? And I've shown to you guys in terms of how screener.in works, right? So who is joining for the first time, guys, or who have missed out, please understand, guys, there's a site called screener.in where if you go over there, right? So suppose if I give over here Wipro, okay? I give Wipro Limited. So Wipro Limited comes up, right? Now you have this export to Excel sort of a feature, right? So if you, now there are two things that you can possibly do. If you say do nothing and just press on export to Excel, now then two things would happen. Just give me a minute. Somehow my eyes are not working. Yeah. So if you just click on that, the first thing, so suppose if I click on Nestle, I select Nestle, and this sort of a sheet comes up, right? So this will give you all the figures of Nestle and all for over the years in terms of the P&L, quarters, balance sheet, cash flow, and on all these figures would come up, right? So that is one thing. But there is a very good feature in this thing in screener.in, and that is that if you can have your own customized Excel sheet. Okay, so suppose if you have taken these figures and have done some computation, and if you upload that Excel sheet, then on the way you have uploaded the Excel sheet for all the companies, when you then click on this download button of the Excel sheet, it will come in that form of computation, right? So let me show it to you. So say this is my computation which I have uploaded, right? And this is of Reliance Industries. So all this, the only thing that we need to be aware of, that there is a thing called data sheet, as you see over here as well. This data sheet is something which you shouldn't, which you need to ensure that you don't make any changes on that, right? And taking the help of data sheet, once you do this set of computations at your end and upload. So for every piece of, okay, I hope you're not able to see, right? I've not shared the screen. Just a minute. Are you able to see now, guys? Just give me a quick A in the chat box. You're able to see, right? Yeah. So as I was mentioning, so this is of Reliance Industries. So I've done all the computation. As you see, this data sheet is something that you cannot change. The normal sheet that you're getting to see, there is a data sheet element over here. This is something which you cannot change. And on the basis of the data sheet, if you have done this set of computation, so as you see over here, all the computation is done, right? FCF by CFO, and many more calculations are done. I'm just trying to bring your notice on your one element, one calculation. So if you do this computation and then share it across, or means say on screener.in, if you upload that, and then for any company you want to download the Excel sheet, it would get downloaded in this format. Isn't it good, guys? So whenever for any computation in fraction of seconds, all the calculations gets done. And this computation then happen in minutes and seconds, right? And if you are logically clear how to interpret on these numbers, then you know what exactly to see on this. So today my discussion is free cash flow from operations. That is the topic of. So suppose free cash flow and CFO something comes up, and you see there is a negative free cash flow. So I'll discuss on that. It's not that negative free cash flow doesn't mean that you would not be taking it always on a negative spirit, and you are not going to try to find out why it's a negative free cash flow, right? So I'll discuss on that, but you at least you'll get some perspective, right? And which will, yeah, quick analysis, as Deepak says. So it's a very quick analysis that you'll be able to do, and where first conclusions you will be able to come up with, right? Is it good, guys? Give me a quick A in the chat box if you're finding this to be good. Right? Yeah. So earlier people must be thinking it's a theoretical बोल रहा है, right? So obviously theory ना समझाऊं तो मैं क्या समझाऊं? मतलब अभी you would be able to relate to what I'm trying to say because of the set of things that I've already explained to you. Otherwise you won't be appreciating. अभी मुझे seconds भी नहीं लगा समझाने में ये चीज को. अगर वो बेस का वो theory नहीं समझाता तो this won't have been appreciated, right? So this you got it. So now you have got to understand how the computation needs to be done, how it needs to be interpreted, and how everything is flowing. So let's now move to the next part of it. So I don't think today is going to take much time for compared to the other set of days. So guys, at this juncture, my request is I'll just share a LinkedIn. I'll discuss more as we move forward, but I'll just share a LinkedIn link. If you can just place few words in this link in terms of what has been your experience till now, and then I'll just close for 2-3 minutes. Just place few words over here, and I'll come back in 2-3 minutes. I think, guys, I have rushed out. What you have to do is you just click on this link, go to the comment section, and place your words in terms of how you're finding till this point of time, whether it's good, bad, ugly, whatever. Right. So I just need few comments of yours so that I take it as a feedback and I understand where to improve upon. Right. Or if you're getting it good, then that's great. Right. So please place your words, and that would be very helpful. And you can connect me over LinkedIn as well. Right, guys. So let's move forward. So the next question that comes up is that should we reject companies with a negative free cash flow straight away, right? So that is obviously the very common question that comes up, right? So how you should go about looking at it is obviously the answer is no, right? So it doesn't always mean that the company is having negative cash flow, so you have to refute it, you have to reject all those companies, right? So answer is definitely no. This is because when an investor looks at the formula of FCF, CFO minus capital expenditure, then she would notice that instead of a weak CFO, a large capital expenditure may be the reason for negative free cash flow, right? So, moreover, a large capex may be a result of excellent investment opportunities available for the company in its business. So, as a result, the company may be striving to grow its business fast to capitalize on the available opportunities, right? So, maybe that they have making so that is the reason we need to dig deep and understand what set of capital expenditures they have made, what set of investments they have done, how they are thinking about in terms of the future unwinding for themselves, right? So that's why you have to read through the annual reports. You have to read through the different comments that come up like the major places in different forums, the equity. If you can get hold of some trade rating reports, equity reports, where these guys have placed their thoughts around this set of things, right? So you need to uh, hear it out, understand, interpret, and look into it, right? So as an investor, you would appreciate that the final investment decision by an investor is a result of a combination of all the parameters like financial analysis, business management, and valuation analysis. Therefore, even in the case of companies with a negative FCF, if the investor notices that they have strong performance on other parameters and their debt level is under control, then he or she may look at these companies for investment instead of rejecting them straight away due to negative FCF, right? So is it clear, guys? Did you get a understanding of what I'm trying to place across? Just let me know over the chat box. Yeah, just place A in the chat box, guys. If you have got, you're getting the mental map, the interpretation part of it, right, guys? My intention is to break it up into smaller pieces, and in every webinar to discuss on different elements. So to one day I discuss FCA, other day I discuss PE, other day I discuss management analysis, right? So in management analysis, what sort of things you have to, because there's a plethora of things that needs to be looked into, right? And so in details, I have discussed in my fundamental analysis program and other equity research program and all, which I'm offering at this point of time. A special offer is going on if you guys are knowing about that, right? So 14 programs, the investment banking suite, which I'm placing at just 3,999. This till this Sunday, right? So thus, machinery intensive businesses have a lower FCF as they might need to replace machinery. So that needs to be understood, right? It's a good question, but then that is the reason, right? So it's a additional investment they are doing. It's an investment that they're doing for additional revenue, or it is just an investment they are going to do for generating the same level of revenue that they have, right? And so what about the old machineries? What sort of depreciation has taken place over the years? So they have taken into account all those set of things that would also be having an effect on the cash flow, right? So all these things has to be really looked into. But see, you cannot go very detailed in terms of every bit of analysis. So एक ही company लेके जिंदगी भर बैठे रहोगे, right? So we have to be practical on the other side as well. So these are those indicators which help us to focus in terms of where we should focus more and which are the areas which are good enough and we can go ahead with, right? So these are those green, yellow, and red indicators. So if you see something happening on these lines, you have to be cautious around those. So that is what I'm trying to place across, right? So the next thing is that now another question that commonly comes up over here is that shouldn't nets of CFO, CFI, and CFM, I mean to say cash flow from operation, cash flow from investment, and cash flow from financing activities, all be taken into consideration, right? So that is also a question, right? So in that context, what I have to say is that we can understand it further by taking an example of any common household where some of the members can earn salaries and use it to spend on different expenses like household expenses, children education, etc. So every month, the surplus cash remaining after meeting the expenses is invested in assets like FDs, mutual funds, PPF, stocks, etc. And some amount of money will be kept at home to meet small cash expenses. Like this is how it goes about. So in the case of such a household, the free cash flow will be equal to surplus cash left from salary after meeting expenses, right? So what is the free cash flow? The way I've discussed till now, it is obviously the salary after meeting the expenses. Whereas the net cash that is generated would be the cash kept at the house after investing in FDs, mutual funds, PPS stocks, etc. So we believe that to assess the true surplus cash generating ability of this household, an investor would need to focus on the free cash flow. If one focuses on net cash after his investments, then she might erroneously conclude that the household is not saving any money, which is not the case, right? So if we focus only on that last cash portion of it, then we may have a wrong interpretation of the thing that we are not really saving much, right? But the truth is that we have that saving, and that saving amount is being invested in different forums, right? Is it clear, guys? Is this aspect clear to you? Yeah. Abhishek is such an easy example. Yeah, right. So, right. So this is clear, right? So let's move to the next part. So when we extend the same argument to companies, then we find that the FCF of any company is the key parameter to ascertain the surplus cash generating ability of the business. So the net cash generated after CFI and CFF is the residual value left after a company has used its FCF in the manner it deemed fit, like investing in fixed deposits, mutual funds, subsidiaries, or repayment of loans, dividends, share buybacks, etc. Right? So that is precisely the reason it is avoided. So we believe that if an investor focuses on the net cash generated after CFI and CFF instead of free cash flow, then she would not be able to assess the real surplus cash generating ability of the business. This is because even in the case of companies with high FCF, the surplus cash of the company would already have been utilized, invested in FDI and all those things, and no significant amount of net cash would have been left in hand. Therefore, if an investor focuses only on net cash after CFI and CFF, then we may erroneously conclude that this company is not able to generate any cash, right? So is it clear, guys? Sorry. Is it clear? Is the concept of FCF clear by this time? I took 50 minutes of yours, guys. I hope in 50 minutes you are now clear. जिंदगी भर नहीं भूलोगे कि फ्री कैश फ्लो क्या होता है, CFO क्या होता है, नेट कैश क्या होता है, मार्जिन ऑफ सेफ्टी क्या होता है, और फ्री कैश फ्लो के साथ CFO का ये क्या है, कैपेक्स क्या है, how we should look at positive free cash flow, negative free cash flow, and your this set of things, right? Mohit Verma says crystal clear, right? So guys, this is the extent to which I had to discuss in as far as this topic is concerned. A few things let me share at this juncture. So if someone is joining today new in any of my sessions, I'm sharing across a few of the common things that people have questions around. So please copy paste this, like how to make a career in investment banking, things to know to make a career in investment banking, career opportunities in investment banking flow, how do I find a job if I don't have relevant work experience, and all these set of questions keep on coming. So I have this webinar recordings, so you can just copy paste this at your end. And if you guys are not part of my WhatsApp group and you'd like to join in my further webinars, I'm sharing it across the, sorry. Just a minute. I have few more things I would like to discuss. Just why this is not. Oh shit! I don't know why I'm not able to copy paste this one. So let me try to copy the sentence. Yeah, I think this should happen. Right. So I've given you the WhatsApp link if you want to join the further webinars and you want to be uh, uh, wanting to know when this is going to happen and stuff like that. Join the WhatsApp group. Join the Facebook group. Also shift your mails from spam to the primary mail inbox so that you do not miss out on any of the thing. Right. So guys, I hope you are added value. So now I would like to discuss a few of the questions around career and stuff like that, and the life stuff that I do on a regular basis. So if you're interested, you can stay back, or I can see you later on some other day, right? But I hope it's clear till now. And which I wanted to start with, let me try to discuss few things which as for me, is very important where people do make mistakes. So guys, few things. One is in terms of a question which came up to me, that whether one should pursue MBA versus CFA. Like if someone is at this juncture where the person is decided upon MBA or CFA, and I think this thought, what I'm going to share across, is applicable for anyone at any in any sort of a profession they are in, right? What I'm going to say is that guys, uh, if you're like in two minds whether I should pursue an MBA or CFA, I would suggest you that please pursue an MBA, right? And the reason behind that, my logic behind that is, one is that MBA is something that you cannot do at a later point of time, right? But CFA you can do at any point of time. That is number one. Second is, from MBA you can get a platform through which you can get a placement, right? So that is the second part. The third and the most important thing, which many people don't understand, is that whatever technical knowledge you are getting, whether as a chartered accountant, cost accountant, as CFA, or whatever technical knowledge a person is, if someone is in healthcare industry, healthcare technical understanding, one is in the hotel industry, a technical and understanding in the hotel industry. So it takes roughly say 8 to 10 years for the person to get into a level where say he or she moves from say junior analyst, senior analyst, assistant manager, manager, senior manager. So by the time you are in the senior manager or AVP level, you are no more an individual contributor. And this period in today's world, it takes roughly 8 to 10 years. Okay, for some people it may be much earlier. For some people it may be few years later. But at an average, I'm saying it takes 8 to 10 years. Now, so what does it mean? That suppose if you are at the age of 25 now, and 8 to 10 years you are at the age of 33 to 35 years of age. अब उस समय क्या होगा कि at the age of 30 to 35, when you have a family, you're married, you have a kid maybe, right? So it's very difficult at that point कि मैं सब नौकरी वोकरी छोड़ के मैं पढ़ने चला गया, MBA pursue करने चला गया, right? It's not going to practically happen at that point of time. It's very difficult, right? So that's, and the other thing, if you think that once you are in this mid management level of senior manager AVP, you have to take up business responsibilities. Okay, so you cannot be the CEO of a company just doing technical stuff, right? You have to have an orientation around business. तो फिर ये जो पूरा लाइफ स्पैन है 30 to 35 से 60 साल की उम्र तक, जब तक मैं मान के चलूं कि मैं काम करूं, if I'm doing job, or if it is business also, I need to have that business orientation for this 25 years, right? So if I don't appreciate marketing, if I don't appreciate sales, I don't appreciate leadership, right? These are the subjects which are taught actually in a good management college, right? That is the orientation that is placed across. So that people would miss out on. Okay, and then so MBA qualification आज के दिन ज्यादा काम में नहीं आता है. MBA qualification बाद में काम में आता है ज्यादा. Are you agreeable to this? Are you getting what I'm trying to say? Are you getting the message loud and clear? So that is the reason I say, many people are there who cannot afford pursue an MBA. MBA is expensive also today, though we have means of getting education loan and stuff like that. लेकिन उसके लिए भी collateral लगता है. काफी जन के पास वो collateral देने का भी कुछ होता नहीं है. Right? That's the truth of life. So that I understand and appreciate. तो कुछ नहीं कर सकते हो तो छोड़ दो. अब जितना कर सकते हो उतना करो. इससे ज्यादा तो वैसे भी no one can do anything, right? So one can do to the extent one can possibly do in his or her life. So guys, are you agreeable to this? Give me a quick A in the chat box if I'm making sense to you. I'm trying to give you a logic in terms of why I'm saying so, right? So I hope you align to the logic I'm placing, right? So if you are in this contradiction of life, कि मैं ये करूं कि ये करूं, sort of a situation, right? This is one thing. Second is, as you go up in your career, guys, please understand there are two words. One is a teacher and the other is a practitioner. Okay? मुझे बहुत लगता है कि आदमी को ये समझ में नहीं आता है कि एक टीचर और प्रैक्टिशनर में क्या फर्क है and whom to look after for at what stage of life. तो क्योंकि हम लोग बचपन से फ्रॉम द एज ऑफ 5-6 हम लोग पढ़ते रहते हैं, सो हम लोग टीचर देखते हैं 20 साल से, right? For till whatever graduation, post graduation we come access to teachers, and we think teachers are the right people who would give us all the solutions that we are looking for, right? But that's not the case. Teacher gives us the knowledge which is absolutely required, which we totally appreciate. They teach us the ABCD, which we totally respect, right? But क्या होता है कि बियॉन्ड द टीचिंग, मतलब जब हम लोग प्रोफेशनल होने की कोशिश कर रहे हैं ना, वी हैव टू लुक फॉर मोर एंड मोर ऑफ प्रैक्टिशनर्स हु आर एक्चुअली प्रैक्टिसिंग इन द इंडस्ट्री. यू आर गेटिंग गाइस व्हाट आई एम ट्राइंग टू से? सो हम लोग को थोड़ा फोकस टीचर से प्रैक्टिशनर के पास पहुंचना है, और in whatever means and ways we can reach out to practitioners of the industry, to whom we may come in contact with, learn from those set of people. Like I am a practitioner to you guys, right? I am not a teacher. मेरे पास हर मतलब चीज का तुम क्यों बोल दोगे और मैं तुमको एक्सप्लेन कर पाऊंगा, ऐसा नहीं हो सकता है. Because there are many things we do on at a professional level, जो we don't go about reinventing the wheel all the time, right? So we take some things for granted and we go on doing the work. अब मैं गाड़ी चला रहा हूँ और मैं ऑटोमेटिकली गाड़ी चलता है, राइट? बिकॉज वो मेरा जहन में आ गया है. अब तुम पूछोगे कि तुमने गियर में पिछला आगे क्यों दिया, पीछे क्यों दिया, तुम ब्रेक क्यों मारा, तो क्लच में क्या कितना लेवल्स होता है, तो आई कैन नॉट गिव यू ऑल दोस आंसर्स. आई होप आई एम मेकिंग सेंस टू यू, राइट? सो अ प्रैक्टिशनर वुड गिव यू which start from that place where a teacher may end, right? So a teacher may give you those basic knowledge, but then how to practice on that knowledge and how to bring those things into giving people a real perspective around things, that is what the work of a practitioner is. So I hope that you are appreciating this also. Just give me a quick K in the chat box, guys. Or if you have other thoughts, if you may disagree, guys, I am not saying you always have to agree to what I'm trying to say, right? But these are my personal thoughts I'm trying to share across with you, so that if it adds any value to you, right? So these are few orientation which I think which people misses on, and which I'm trying to bring into bring forward, right? The other is perfection versus progress, right? So I see many people really not focus more on the in the intent of perfection. They somehow don't progress. What do I mean to say by this? So they think that if I get to do 100%, then only I'll start doing it, or I won't do it. But believe me, guys, जिस दिन मरोगे भी ना, उस दिन भी कुछ ना कुछ सीख के जाओगे. वर्ल्ड से, ठीक है. So every day we are going to learn, and every day is a learning day for us. So there is no perfection. Perfection is basically a myth. So there is no perfection. और ये परफेक्ट सिचुएशन होगा, परफेक्ट टाइम आएगा तभी मैं कुछ करूंगा, परफेक्ट सिचुएशन होगा तभी आई विल टेक स्टेप्स. दैट परफेक्ट डे इज नेवर गोइंग टू कम. सो वट एवर यू आर एबल टू प्रोग्रेस, तुम जीरो से जितना आगे बढ़े, 10%, 20%, 30%, 50%, 70%, whatever level you can progress, get into that and progress. So don't get into that myth of perfection, because that perfection is never going to come up in your life. Am I making sense, guys? Right? यहाँ पे बहुत आदमी अटक जाते हैं ये सब थॉट प्रोसेस में या ये प्रैक्टिसेस में, एंड दैट इज व्हाट आई एम, मतलब दिस इज अ मिक्स ऑफ नॉलेज एंड viewing life, right? So these are those overlaying layers, और इसको लेके कोई बातचीत करता नहीं है. That is where I'm trying to add value. I hope I'm doing so in the process. But these are, many people may have many perspective around this thing, but this is my perspective which I'm sharing across with you. Guys, give me a quick A if it were this one you find valuable, and there is last one more thing I'm going to discuss with you guys, and then we'll call it a day. Okay. And the last part which I would like to discuss is something which is called analysis versus analytics. Guys, please understand, many people are getting confused in today's world with data analytics and everything coming up. And they hear words like Python, R, and all those stuff. कि मैं मतलब ये सब भी मुझे सीखना है कि नहीं है to be in the world of investment banking. So guys, please understand that there is a difference between analysis and analytics. So when you are analyzing a company, say Tata Motors, and you say they are coming up with a factory where they need a corpus of money of 5,000 crores, and you are the person who is appraising whether you should be extending finance to that particular company, right? So what you need to see, undertake industry analysis, management analysis, company analysis, financial analysis, lot of things you need to analyze, right? So when you are doing that nature of thing, that is falling under broader head of analysis. But suppose when you are analyzing a lot of small things, which is in crores, say credit cards, which are in crores and crores of people are holding credit card as on today. Now, if you want to do a study where you need to understand that a certain section in Mumbai, say the Powai area of Mumbai, how the credit card holders of my company, how they are performing. Because you must have been knowing that this is the performance of certain geographies also, it is decided whether they would be extending credit cards to that particular location. So this falls under the risk analysis section of companies, right? So this is one example I'm trying to give. Now, they cannot analyze the individual credit cards, right? You cannot analyze the credit card of Arinda, Manu, Venkata, Kavita, you cannot go on doing that, right? So like what you do for, say, Tata Motors, you cannot do it individually. So what you do over in that case, you take a sample and then extrapolate that for a population. And that is where statistics comes into play, right? So when you are undertaking analytics, there are three legs to it. What are the three legs? Statistics, programming, and the domain knowledge. So if you are doing analytics for finance, then finance is the domain knowledge. If you are doing it for supply chain, then supply chain is the domain knowledge. If you are doing it for marketing, then marketing is the domain knowledge. You're getting what I'm saying? The other two is statistics and programming. Now, no one can be good in all the three, let me tell you. But there may be people who can be good in two. Say maybe the domain knowledge with statistics, or some may be good in domain knowledge with programming, or some may be programming statistics, whatever, right? So that is where analytics comes into play. You're getting? But there will always be challenge in the analytics space with people who are very good in maths and stats, right? So guys who are having an orientation or want to align themselves with analysis, right? So that is where the set of things that I train people on, the programs that I place across, is more from the perspective of how you can build your skills around analysis and not analytics, right? So if you want to make a career into analytics, then you should pursue that wholly, right? But you need to be clear whether you really have interest around analytics, right? Because sometimes there is so much of data. Let me tell you, it's not at all. I have got training around this, and believe me, that is not an area. Just for my interest, I took the training, but I had a similar experience long back where when I exposed myself to SAP, say a long back, almost 20 years back, right? So that is also all number driven, data driven, where you are just collating and so I'm not good in that sort of a work. So if you're not able to align with that sort of too much of data around stuff, right? Then you should avoid analytics. If you're good in that, then follow that and get into that. And if your intention is to analyze companies and take decisions around investments and projects and industry and stuff like that, if that sort of orientation is there, then you should follow analysis, right? Does it make sense, guys? Give me a in the chat box if I made sense to you. Right? So I hope these few things are getting clearer to you guys because I think these are very essential things. The topic of weighted average cost of capital. Jyoti, I won't teach you theoretical stuff. Weighted average cost of capital, just weighted average cost of capital is not a concept. I'm not here to teach you the college stuff, right? I'm over here to teach you how you apply certain things. So in the context of that application, if I see I need to explain weighted average cost of capital, then I'll explain that. But I won't take a session where I'm going to teach you as a teacher, as I mentioned just now. I'm not a teacher, I'm a practitioner. So how you make use of weighted average cost of capital in the context of work, if that thing comes up, like for analysis, free cash flow is definitely a thing that we'll look into. That's why I discussed on that. Tomorrow I may discuss something else, right? So that's the way I look into it. As I case, one gets to learn about domains. So what's your question, Rakan? Management consulting is very interesting. Analyzing varied case studies, one gets to learn about. So do you have any question, Rakan? Just let me know. So guys, was this 1 hour, 10 minutes fruitful to you guys? Did you learn something? I hope you're going to get back to your dinner table or with some learning, right? I hope I didn't waste your time in the process, right? On what basis or parameters we should invest in stock market. So Venkata, there are various levels of analysis that is done, but as the first level of analysis, I have discussed on there's a thing called 8 steps to financial analysis, which I have already shared the recording, and if you want, I'll be sharing the recordings again tomorrow. So I hope you have joined the WhatsApp group and the Facebook group. So I'll be sharing over there, so you can go through that. These for Venkata, Sanaya Silam. Venkata, did it answer your question? Okay. Nidhi, it was helpful. Great. Thanks a lot. Right, guys. So have a good night and Malcolm, this set of things you don't really learn in books, this set of studies. This happens only through experience, and no books can really teach you how to. So be a part of this webinars. If you're part of my like fundamental analysis program and equity research program, you get to learn how exactly all these things, set of things are done, right? So because I've discussed over there in a practical level as to how things are done, and not exactly how it really comes up in a book. Because suppose if I want to show you something around spinner.in, how do I show it in a book? Right? I need to show you in Excel, I need to take you to the softwares. You cannot. So that's why I'm saying these are the places where that orientation has to change. You have studied enough of books in your life. Now move into something which is more practical, where people teach you through softwares, Excel, reports, PDFs, right? So I mean to say reports and stuff like that. Because in finance, everything boils down into three things. It's either some work over Excel or some work on a Word file, some reports and something that you're coming up with. And the third thing is your, what do you call that? Some software. So you are analyzing something on the software, right? So software, I mean to say some technical charting software, so stuff like that. Say spinner dotting is also software, right? Which we are taking help to analyze certain things. So that is how it is. So, and all these things can be done on a laptop, right? That's the best thing. That's why finance can be practically taught over laptops or computers, I mean to say, right? But if you're a civil engineer, तब तो जमीन पे जाना पड़ेगा, वो brick लेके उसको डालना पड़ेगा. So that sort of a practical work is different. So that may not be a possible on a this thing, but finance में हर चीज किया जा सकता है on computers, right? So Abhishek, DRHP red herring prospectus D का मैं भूल जा रहा हूँ. Red herring prospectus. D ka I'm forgetting the term. Sorry, Abhishek. Right? So to become an instrument for which MBA specialization I should choose. So obviously, yeah, Abhishek, that's it. So for MBA specialization, so obviously, if you're trying to be an investment banker, you have to choose finance, right? In this thing, and suppose if you tomorrow want to be into marketing and sales also, but a guy, please understand, this is also one more thing that I'd like to stress, that don't try to get into the world of finance being from a sales background, because technical strength ना होगा तो बहुत मुश्किल हो जाता है. But if you are technically strong in the initial days, if you have that understanding on finance, so what happens is when you go to the customer, you speak sense or whatever the person is trying to say, you add more value to that individual, right? And once you add more value to that individual, the person respects you, and then only a sales transaction happens. But if the person understands कि तुम में दम नहीं है, तुम्हारा basic clear नहीं है, so and for the product that is sold in the financial market, you have to be very technically strong. तो वो technicalities का समझ नहीं है, तो फिर then what you have to do, what I see, the sales guys then go back to the analyst guys and take their help. तो एनालिस्ट फिर सेल्स भी कर रहा है और एनालिस्ट का भी काम कर रहा है, तो उसका डबल काम हो जाता है, और ये सिर्फ चाय पीने के लिए और क्रॉसिंग द रिसेप्शनिस्ट वाला हाय रिनी, हाउ रॉमी, हाउ आर यू, ये सब करने के लिए टाइम वेस्ट करते हैं, right? So this is what practically that happens. So no point wasting time on all those stuff. Am I making sense, guys? So if you're building your base around finance, so that's the best thing that you can possibly do. Venkata, don't think about the best, where you can join, give the competitive exams, and wherever the best you can lay hands on, go for that, right? So I hope, guys, you got some learning today, and you some value has been added to you, right? So if there is any question, just press A in the chat box. Then I'll wait for answering your question, or I'll call it a day today. But I hope the day has been good, right, guys? Thanks, Balaji. Thanks. Good night. Okay, guys. So good night, guys. Bye. See you on Friday, and Jai Hind. Bye.